TCS constant currency revenue declines in a weak first quarter. The management also points to delayed decision-making among clients. The stock slips over 2%, recovers from the lows, but drags other IT stocks lower as well.
Glenmark Pharma signs a deal with AbbVie to out-license its myolopa drug, ISB 2001. Glenmark will receive $700 million as an initial upfront payment, which could rise to around $1.2 billion. Glenn Saldana tells CNBC-TV18 that they will commercialize the product in India and emerging markets. The stock is locked 10%.
HUL is the top Nifty gainer, up nearly 5% as Unilever veteran Priya Nair takes over as MD and CEO from Rohit Jawa, who has stepped down from his post.
Shares of IDA slip 5% as the company reports a sharp rise in the gross NPAs in the first quarter, part of which was due to recognizing Gensol Engineering as an NPA. The management tells CNBC-TV18 that they are confident of resolving the Gensol issue.
Shares of Z Entertainment trade lower, down nearly 4% as shareholders reject the proposal to issue warrants to promoters.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. And as we speak, actually, the markets are at the low point of the day. The Nifty is down 140 points thereabouts. The Nifty Bank, that was showing a relative outperformance, that's now down 240 points. And the mid-cap index is down a full 500 points. Remember, in the last 1.5 hours or so, we've seen the Nifty actually try to pull back. It was down close to around 30 points. But from there, it slipped yet again. So interesting times. Let's see how this goes. Hey, Mangalam.
Hi, Nigel. Yesterday as well, through the course of the day, we ended lower and we actually ended at the low point of trade, even though on an absolute basis, the decline wasn't as much. But this morning, the only thing we'll watch out for whether the Nifty goes ahead and closes above the 20-day moving average, which is close to 25,250 thereabouts. So that is an important mark that I'll watch out for. But by and large, we do have a bunch of stocks which are doing well, and all of them actually belong to the consumption space. So if you look at something like, Gillette, which is picking pace. We have VIP, which has been buzzing around for the last few trading sessions as well. And we have a bunch of other consumption names, and not to mention or not to forget mentioning HUL. Remember, before this announcement came back in the last 5 years, the stock had gained just 8%. And today, on day one itself, it's done about 5% of that. So the street will be keeping an eye out on what Priya Nair brings. But remember, the underlying macros of the consumption space are improving. So with an added leader impetus and an underlying macro improvement, aided with the stock not having done much over the last 5 years, could perhaps be an important trigger or an inflection point to watch out for Hindustan Unilever. We're also seeing some traction in Asian Paints, which too has recovered a fair bit from lows, and Interglobe Aviation continues to do well this afternoon. Let's talk about Anand Rathi Wealth. However, the street is cheering those numbers. The company has maintained its trend of delivering strong growth in the first quarter. They've also achieved 88% of its guided AUM for FY26. Firoz Aziz, who's the joint CEO of Anand Rathi, joins us now. Firoz, you want to revise your guidance? 88% you've achieved in the first quarter itself, with 3 quarters to go.
Good morning, Mangalam. No, ideally the AUM number has a lot of external variables, so we will not take chances and disappoint our shareholder at the end of the year. So we'll keep the 1 lakh crore AUM mark as the guidance. Out of the movement from the from 31st March numbers, we've seen about highest ever net mobilization, and market has also given us something. So I think, to answer your pointed question, no change in the guidance. All 3 parameters, revenue, PAT and AUM. But there seems to be a case of an AUM guidance revision, but we will hold our horses because we want to undercommit and over-deliver.
Can you split that? How much of that was because of external factors? How much of that was because of internal control?
So we added the highest net mobilization, which is net mobilization, by which in Anand Rathi's nomenclature, net mobilization is very microscopically looked at. We don't count if there is somebody holding a tax-free bond. We don't count that. So that's about 3,800 crores of net mobilization in spite of the uncertainties which the markets had.
Got it. All right. Hi, Feroz. Good to see you in. Your cost to income has dipped by around 570 basis points on a quarter-to-quarter basis. Any one-off out there? What's the sustainable number you're looking at?
Yes, Nigel, of course, there is some degree of operational efficiency which has come in the first quarter. But I don't see any further cost to income ratio reductions because we like to reinvest in the business. As you would have heard me see in the last 14, 15 quarters, we've been doing the results. Always been saying we're going to reinvest our monies and not look at operational efficiency at this stage of our business. We believe that we're not even the first stage of a company's evolution. So not too much should a shareholder expect in terms of operational efficiency, because if I reinvest is when I can consistently grow at about 10, 15 years. Nigel, I think I should definitely highlight you in the NSE Small Cap 250s, whom we are a constituent of. In the last 3 years, we checked how many have given a PAT guidance and met it. We are the only company in NSE Small Cap 250 who has given a PAT guidance. Of course, not all of them give. So we want to make sure this statement I'm able to make when I'm 60. So that's why we'll reinvest.
All right, you will reinvest. On the RM front, I have to ask you this, because the last couple of quarters that we've had these conversations, you've been aggressively adding RMs. This has been a case over the last 5 to 6 quarters, if I remember correctly. Now, the last quarter was just 2 additions that we've seen, from 380 to 382. That also has led to some improvement in operational efficiency. Do you think this is a number that you will maintain? And given the sort of rush that there is for relationship managers in the industry, you will hold your horses because you have enough?
Mangalam Saab, like you rightly said, you very clearly, rightly noticed one of the lowest number of RM additions. We had let go of a couple of RMs as well. Because of some issues, but our attrition is near 0, 0.1. 0.2, we've like you said, in the industry, there is so much demand for private bankers or relationship managers, whatever nomenclature we want to use. But we have believed that we have to internally build them. If I buy a relationship manager from somewhere, it is but obvious somebody else will pay him 30, 40, 50% and then take him away. So if you want near 0 attritions, you have to have at least 70, 80% of your RM fraternity internally trained. And that's what we've been doing from 2015-16, when we realized that this hypothesis that building a wealth management business by hiring RMs laterally is not a great hypothesis. So we started investing in this model in 2016, December 2015 to be precise. From there, today, 83, 84% of my RMs are from internal trained. Some are from IIM, some are rank holder CAs, some are from modest colleges as well. But we internally train them and keep a cultural fabric intact, is why our attritions have been low in an industry where attritions are not being able to be curtailed.
All right, a pitch for the team as well there, Feroz. I've interacted with some of them and they're quite happy and quite upbeat on prospects going ahead as well. You keep them fully motivated and keep them on their toes. Good on them. But you're also looking at expanding operations abroad, Bahrain, UK. There's an opportunity you mentioned in the past. So say in the next 3 to 5 years, what would the contribution to the flows, financials from operations as well, Terma, because there is a big market out there.
Nigel, I personally believe, like you rightly pointed, there's a huge market out there. See, capital searches for growth. And I think global capital, NRI capital, will look for growth. And I think they will not be able to ignore India for far too long. We are very upbeat about our prospects, like Bahrain and UK. We have a Dubai office, which has done beautifully well so far. So I think I'm very, very positive, but I would not want to comment too much in terms of what business from an Anand Rathi standpoint. But I think I was in Paris for a conference where there were about 1,000 professionals from the globe, where I go every year. The kind of enthusiasm everybody has towards India has dramatically shot up over the last 4 or 5 years, especially post-COVID. So I think we want to be making sure that we lay our chips at the right place, build it. The AIF models or the Gift City models and the AIF freedom which Gift City provides, and dollar investments with no problems of repatriation, the tax benefits for a corporate, the tax GST benefits. I think all of this put together creates a very strong case for a wealth management outfit to not look away and build the foundation for a robust international business.
You briefly alluded to Gift City. Have you made a decision there?
Mangalam, not as yet. Of course, one of our group entities has had some experience in terms of taking licenses. So that we are borrowing in terms of their understanding, but you will see some action very soon.
You also mentioned Paris. I wondered whether you were in Paris right now or not, because there's so much greenery around you. Where exactly are you joining us from, out of curiosity?
No. I'm joining in from a resort in Bangalore. One of my friends' birthday was my client. But I
Oh,
was
wonderful way
in
to.
Paris during the storm. So
Okay,
hardly any greenery.
you don't want to disappoint shareholders by over-guiding and under-committing or over-committing and under-delivering and all of that and stuff. But you did give them a bonus last year. There was a buyback. This year, what's the plan? Is there another bonus in the offing? Is there another buyback or maybe some dividends coming in? You're enjoying the party in Bangalore. What about your shareholders?
Yes, Mangalam. See how we look at it. I'm telling you with no holds barred, as transparently as possible. When we discuss, we say after bonus, our dividend we gave 14 rupees. Can we maintain that in spite of a bonus? That's the target which we have. So every time I give a bonus, I want to keep 14 rupees as a dividend on expanded number of shares. That's the aspiration. Point one. Buybacks, of course, we did buybacks that gives tax efficient payouts, that used to give tax efficient payouts to our shareholders. Bonuses, I think the frequency, as far as if I have to tell you as transparently as I could, good. Yet, please don't hold me to it. Every couple of years, 2 to 3 years is what we internally discuss, but that's not a guidance. I'm just telling you exactly how we discuss amongst us as professionals.
All right, Feroz, SEBI has proposed relaxing Regulation 24B and may allow mutual funds to offer investment as well as advisory services to non-broad-based pool funds, which requires a separate PMS license now. What are the kind of implications on your business if this goes through?
Ajay, if you look at regulation is creating several very, very effective vehicles for a manager and a client to pick and choose from. So do I welcome this move? The answer is a big yes. See, now you have the special investment fund in the mutual fund category. You have the mutual fund, special investment fund, AIF, and the PMS with further expansions of the PMS gamut. So to answer your pointed question, does it impact business? Not from a revenue standpoint. Does it help everyone to understand what their capability is and what my client need is and be in the daira of regulation? The answer is yes. So I'm so happy with the canvas expanding and limiting factors are so low. Now, if you see AIF allows you 2 times leverage, allows you covered calls. If you look at SIF, allows you covered calls. Mutual funds have a limit on it. So anywhere you want to go, there's no bahana to do direct derivative or stock. For most investors, if they want risk-adjusted return, they have to come into this gamut. If they go mathematically, there will be no merit left to do direct equity together and derivatives separately, like most people are burning fingers. So I think I love the way regulation is shaping up, and the first July circular of derivative, where we move from notional to delta, is something which is path-breaking for the derivative markets, which will show up in the next 3, 4, 5 months.
Let's see how that shows up for the industry, but more importantly for your numbers as well. For now, we'll let you go enjoy the party that you are having in Bengaluru. Your shareholders rejoicing with these numbers. Look forward to having you on some of the personal finance shows as well. Feroz, thank you as always for discussing the business. We take a short break. On the other side, we have the management of Belrise Industries. Sumed, who's the promoter, joins in for a business outlook. Stay with us.
Welcome back. Well, Belrise Industries, that's the next stock on our radar. Brokerage firm Jefferies recently initiated a buy rating on the stock. They're expecting the company to deliver strong growth going ahead. Sumed, the promoter of Belrise Industries, joins us on the show. Hi, Sumed. Thanks a lot for joining in. Well, tell us, how is auto demand first on ground? How's it looking for you? And also, if you could give us a sense about what is your current content per vehicle and how do you see that move in the years to come? What's the targeted number? Please go ahead.
Sure. So firstly, demand-wise, from a two-wheeler industry, the monsoons are good. Looking at positive directionally there. So that's a good sign. And largely, India is a growing economy. There's upward mobility from people who are buying two-wheelers to now buying four-wheelers. So that transition is also happening. And the tax cuts that the government sort of brought in for the general public at large, that is also supporting good directionally again in terms of good demand. Now, with respect to content per vehicle, yeah, sorry, you had a question?
No. We want you to go for that itself. Content per vehicle. Go for it, Sumit.
So from a content per vehicle, we're about in the two-wheeler space, we're at 12,500 rupees. And over the years, with addition of new products and increasing content per vehicle across different OEMs, we expect to go to about 17,500. In the four-wheeler space, we're about 25 to 30,000, and we expect that to also increase to 45,000 in the coming years with in due course with increasing content per vehicle with our additional products.
All right, 20,000 goes all the way up to 45,000. What's the update on the recent acquisition of H1? Sumedh, when you had joined us during the IPO, you said that four-wheelers will be a big driver for your business going forward. It's close to around, 11-12% of your overall revenue right now. Where do you intend to take that?
Yeah, in the four-wheeler space, we're about at four-wheeler commercial vehicle space, about 12.5%. The H1 acquisition is coming along really well. Good integration that's already taken place. Teams are working together very well. We're very fortunate that one of the main facilities, which is in Rajasthan, in the Bhiwadi, Tapukera area, is only a few kilometers away from our existing facility there. So big benefit in terms of management and synergies on that front. And the second facility is in Greater Noida, which is also fairly close by. We have good operation in the north. So from a manager's perspective, it's doing pretty well. And we expect to increase that and we expect it to positively add to the four-wheeler revenues going forward. And over the next 2.5 years, we see strong growth in the four-wheeler industry for us specifically, outperforming our growth in the two-wheeler space because we already have a strong presence and a market leadership position there. So a larger base with a smaller base in the four-wheeler industry, we expect that to more than almost double in the next 2.5 to 3 years.
So you expect that proportion to double in the next 2.5 to 3 years. You said that it's likely to grow faster than your own growth. You expect your own business to grow faster than the two-wheeler industry, and your four-wheeler to grow at 2x the pace of two-wheeler, right?
So we expect so it's currently at 12.5% in the four-wheeler commercial vehicle space. We expect that to double over the next. So we expect it to go 2x the speed in the four-wheeler industry as compared to the two-wheeler industry. Yes.
Okay, all right. A quick question though. You said that the current content per vehicle is 12,500 and that heads to around 15,000. Is that correct?
Upwards of 17,000.
Upwards of 17,000. All right, 12.5. And this is over how long?
In the next about 2 years.
Got it. All right. So that's
sorry. I'll one clarification.
Yes.
In terms of what I want to say is from a INR crores value in the four-wheeler industry, we expect that in terms of absolute value should double in the next 2.5 or 3 years.
Okay, absolute value should double. Got that. Okay. All right. Also, the industry has been facing some issues with the rare earth magnet issue. Mm-hmm. Any impact on your business?
So obviously, if the rare earth metals impacts the industry, there would be some cascading effects. But we believe that it is the automotive industry is a big contributor to the Indian GDP. The government has eyes on making sure that this is taken care of, and we believe it will in a short span be taken care of with all the forces in the right direction.
That hasn't impacted your end user demand, right? How much of your demand is contingent on the rare earth availability?
So we have whatever so largely your magnets and your rare earth metals are used in the EV industry to an extent, also in other ICE vehicles to an extent, but largely it's not impacted us so far.
And your EV contribution is how much? What proportion of your revenue is, what do you say, platform agnostic?
So we're significantly platform agnostic. All about 70 to 80% of our product portfolio is essentially powertrain agnostic. So as a result of that, we believe there'll be not a major impact because of that.
Okay, all right. Basic numbers before we let you go, Sumedh. You're giving us a very bright outlook in the time to come. And since you've raised money via the IPO, a brokerage firm is talking about you turning into a net cash company from being a net debt company. They're saying by FY28, you could have net cash of 600 crores. Possible?
I cannot comment on that.
All right.
But it'll be net cash. I mean, that's for sure, right? Because your debt reduction has already taken place.
What I can comment on is what the debt reduction has, what we have already achieved. We have we raised 2150 crores from the IPO, which was a complete fresh issue. All the money came into the company. Out of that, 75% was earmarked towards debt repayment. So about 1600 crores of debt is what we've already repaid. So now our debt position stands at net debt stands about at 1,000 crores. So
Net debt is at 1,000 crores. And what the repayment schedule there?
the debt position is about 1,000 crores. Sorry.
What's the repayment schedule for that one?
We'll continue to service debt. It's a very comfortable position that we stand at. If you look at our at our debt to equity position before the IPO, we were at a 1:1. Now we've come down to about 0.2 to 0.3, and based on debt to equity ratio, I think we're at a comfortable position. So through internal accruals and through repayment, we'll be able to maintain that.
Take that point. Thank you so much, Sumit, for joining in. Wish you good luck for this year and the years after as well, with you looking to increase your proportion coming in from the four-wheelers, increase your content per vehicle and improving your balance sheet further as well. That's Bellrise Industries. Did well over the last few trading sessions ever since Jeffries wrote on the company, and now as well, post the management commentary, we've seen a bit of a spike on that stock. Take a short break. As we do that, we'll tell you about CNBC-TV18 Prime, which brings you insights from policymakers, business leaders and economists, all of them shaping the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, gives you unparalleled insights. Tune into CNBC-TV18 Prime at 12 noon daily for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. on weeknights.
Welcome back. Markets at the low point of the day. We're 180 points lower. HDFC Life, that was holding in the green, that's moved into the red. Bajaj Auto as well, and Hero MotoCorp. All those stocks struggling in today's trading session. Well, on that note, we'll wrap up with Chartbusters. You stay with us. Trading Hour comes up next.